The market is going up and down a lot, so a lot of people are trying to find the best deal possible. And I think ABBVIE could be a really interesting stock here. Ever since they hit their year-to-date low in May, the stock has moved more than 25%. And let me remind you that ABBVIE pays a juicy 3.1% dividend yield, with a pretty high growth stat. And in the past 5 years, they crushed the S&P 500 with more than double the returns. So all of this screams ABBVIE could be a great stock to buy right now. But is that really the case? Let's find out more about ABBVIE by diving into the recent earnings report and do a fundamental analysis. We see that ABBVIE missed on EPS, but beaten on the revenue estimates. And for the upcoming earnings, almost all analysts expect another beat. Diving into the financial results, we see that EPS was reported at $0.77, down 32% year over year, when it was reported at $1.14. So this worries me a little bit, especially since the 6-month ended period looks significantly better, indicating that they had not a good quarter recently. Revenue is reported at 14.5 billion, up 4% year over year, looking pretty decent. Looking at the individual segments and drugs, we see that some interesting stuff is happening. I'm not going to discuss every single one of them, only the highlights. Immunology is by far the biggest segment and reported revenue a little under 7 billion, close to half of their total revenue. Humira is by far the biggest revenue source, but this drug has been decreasing in revenue a lot during a patent loss. Meanwhile, Skyrizi and Ringvoq have been increasing quite a lot over the years and continue to keep on growing at a high pace. Overall, this segment reported a 2% increase year over year, looking pretty decent. The third biggest segment is oncology, reporting revenue at 1.6 billion. In total, the biggest drug decreased 8% in revenue. But despite this decrease, the overall oncology segment reported a 10% increase. The second biggest segment, neuroscience, reported revenue of 2.2 billion, up nearly 15% year over year, with most individual drugs reporting pretty good growth numbers year over year as well. Looking at the full year 2024 outlook, we see that ABBVIE raised its EPS guidance from the range of 10.61 to 10.81 to a new range of 10.71 to $10.91. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. ABBVIE is a 353 billion market cap company. PE ratio is at 66, which is insanely high, but this is highly impacted by the recent quarters. EPS is recovering already, which means PE ratio will come down in the coming quarters. Later in this video, I will show you my 3 price targets for ABBVIE stock, so make sure to watch until the end, because it might surprise you big time. Revenue is at 55 billion, and in this graph we see that revenue went up in the long run. Most recently, revenue is stabilizing again after a decent decrease. This is also related to their Humira drug. Gross margins and operating margins are coming down in the recent years. The net margin is also going up and down a lot. So this is definitely something to keep your eye on. For the EPS, it is pretty much the same story. Nothing really special to add here. Analysis expected EPS will be flat in 2024, and from 2025 on, they expect 8 to 12% growth per year. To me, this looks pretty good. This also impacts the current PE ratio a lot. For the revenue analysis, also expect recovery in the coming years, with 2024 reporting only 3%. but from 2025 on, it is expected to see a 5 to 7% growth in revenue per year. Return on assets is sitting at 3.8%, which is a low number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at 14.5%, which is a great number in general. It is also higher versus the 5-year average, which is something that I really like. Current ratio is at 0.81, which is a great number. To me, this looks pretty good. And right now, ABBVIE has 71 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. ABBVIE has 13 billion in total cash, so they can't pay down a big chunk of their debt, which is again something that I don't like. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run. And to me, this looks really good, but you want to keep an eye on the most recent decrease here. Shares outstanding are increasing, which is something that I don't like in general. But it has to be said that ABBVIE stock is at a premium and they did some acquisitions, so I don't blame them for increasing the shares here. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at almost 3.1%, which is a great number. Annual payout is at $6.20 and payout ratio is at 57%. I prefer 50% or lower, so right now they have 43% left in cash to pay down debt, do acquisitions, buy back shares and all other things. The 5-year growth rate is at 8%, which is a great number. Also considering their yield and payout ratio. They increased the dividends for 10 years in a row, which is also really nice. And if you take a look at these numbers, the dividends paid since 2014, we see that ABBVIE did increase the dividends at a decent pace. However, growth is really slowing down here, so that's something to keep your eye on. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that payout ratio was looking really good historically, but most recently it is increasing a lot due to earnings problems they had. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a similar rate versus previous years. And overall these dividends look really good to me, but how about the historical returns? I decided to compare ABBVIE stock with the overall market, in this case the S&P 500. Next to that I added Merck & Co and Amgen. On the 5-year chart we see that ABBVIE had the highest return in this list. And keep in mind this is including dividends. They are crushing two competitors and the S&P 500 big time. Amgen was also close to beating the S&P 500. On the 1-year chart, things look pretty interesting, with again ABBVIE beating the S&P 500 and competitors big time. However, this time Amgen was also able to beat the S&P 500, while Merck & Co is still lagging behind. On the 6-month chart, it is still ABBVIE beating the S&P 500, but this time Amgen did way better with twice the return. Merck & Co is sitting at a negative this time. On the 1-month chart, it is still ABBVIE that is beating the S&P 500, and again, the competitors as well. Bottom line, ABBVIE beats the S&P 500 and two competitors in the long run, and also in the short run. So, could this be the perfect time to buy ABBVIE stock due to its momentum? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 2, 4 and 6%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 10, 12 and 14. For the free cash flow margin I'm putting in 36, 38 and 40. For the PE ratio and price to free cash flow, I'm putting in 20, 22 and 24. These are pretty high numbers for a slower growing company, but they could have a potential mode with their new top drugs. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, ABBVIE stock is around $196. I hit analyze and we see a lot of interesting numbers. And since the company is facing some issues with the EPS, I'm not focusing on the multiple earnings value here, since I expect this number to recover in the upcoming quarters. We have a low price target of $147. We have a mid price target of $191, and we have a high price target of $248. And to me, the mid price target is the most justified here, meaning the stock is currently fairly valued according to these numbers. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on ABBVIE is that it is an amazing company. I used to own ABBVIE stock, but I sold my shares a few months back, when the stock price was near its peak. To me, the stock felt overvalued, so I sold my position and locked in my profits. Back then, I think it was the right decision. The stock has increased a lot in price again, which is always interesting to see. Most fundamentals look really good besides the margins and debt. Revenue was also slowing down, but the new two drops are really kicking in and the forecast looks really promising. From a dividend point of view, I really get excited with a 3.1% dividend yield and great growth stats. From a value point of view, things also look pretty interesting. I don't think they are undervalued right now, but if the market continues to decrease, it could be entering the buying zone again. For now, I'm adding them to my watchlist and keep analyzing them from time to time. The company is recovering, but I think still I prefer a lower stock price to have a higher margin of safety here. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.